Joining us this morning, Richard Bernstein Advisors Dan Suzuki and Charles Schwab's Jeff Kleintop. Guys, great to see you both. Dan, let me begin with you. I know you've been, I would argue, keeping some dry powder over the course of the summer, but now we got obviously the lines of communication open between the president and Xi. You got Zelensky and Kherson arguing this could be the beginning of the end of the war, and not to mention some of the bounce that we got last week. You feeling more constructive?
I guess it depends, Carl, on which market you're talking. I mean, we've been, pointing out that the fundamentals for areas like China have been improving. Unfortunately, with respect to most markets, the fundamentals are still deteriorating. In our view, the big issue here is that profits are going to continue to slow. We think we will be in a profits recession within the next couple quarters, and liquidity is going to continue to tighten. That's probably a pretty bad backdrop for markets. So notwithstanding that you can get a bounce that lasts a month or two, just like we saw in the summer, I think ultimately, the market still has to reprice that growth recession, and I think that's still to come.
Jeff, it's not an uncommon view that this is all tactical and related to positioning regarding the trajectory of rates, and that we're going to have a reckoning moment maybe in the spring, some say, regarding earnings. Are you on board with that?
I think the market's priced in a modest recession in earnings. The market's really been excited by this. Maybe they're giving Thanksgiving for an early Santa pause rally from central banks, but I think the biggest risk to the rally may come from China, but it's not what you think. China's preparing for a shift away from its zero COVID policy next spring, from the BioNTech vaccine approval to antiviral pills, booking the Formula One in Shanghai for April and reducing quarantine times. If they do, that could unleash a year of pent-up demand that could boost inflation for commodities and goods and consumer spending coming roaring back here in the world's second largest economy. And that could derail plans by the Fed, the ECB, and others to pause rate hikes early next year. That might not be welcome news for investors.
Yeah, I mean, just staying with that thread, Dan, if we have actually seen peak inflation, I think kind of going back to the China reopening thing, but if we have actually seen peak inflation, if we have seen peak long-term interest rates, does it even still matter when you have folks like Waller, Fed Governor Waller, coming out just earlier today and saying that essentially the rates are going to stay. They're going to keep going up, he said. They're going to go up to stay high for a while until we see this inflation get down closer to our target. The fact that if inflation continues to remain elevated, even if they step down to 50 basis points, they're going to keep hiking and then they're going to stay there longer. Does it matter if we've peaked or not in some of these other key metrics?
No, Morgan, I think that's exactly spot on. That's exactly the point. I think if you think about the markets this year, predominantly the market action has been about repricing inflation, then repricing the Fed's reaction to inflation. I think more or less the markets have it about right now, if not a little bit more aggressive than what the Fed's already indicating. So from that perspective, as you look going forward, whether or not inflation has peaked or not, I think it has, is less of the question, because the markets are really priced for, that story and repriced for the Fed story. So the bigger surprise that still needs to be priced in is the growth story here. And I think that's ultimately the point. Everybody's ultra focused on Fed and, whether he's blowing his nose or not, but really it comes down to profits growth. And that's where, the next quarter after that, as you continue to see those numbers get more and more negative, I think that puts the pressure on markets, particularly the cyclical parts of the market. On the flip side, that could actually have some positive implications for, certain areas within fixed income.
So, Jeff, the dollar, the fact that it has come off, it has weakened pretty significantly against other currencies in recent weeks. At least last week, it did seem to be somewhat of an indicator for stock market activity as well. Do you expect that dynamic to continue? Does the dollar continue to weaken from here? Or does it kind of go back to the point you just made earlier about inflation in 2023 and what a China reopening looks like?
It's very hard to see the direction of the dollar from here. It's one of the hardest things to forecast. We think the dollar could be maybe near a peak, but maybe it hasn't peaked yet. I think the important thing for investors is to focus on what's been working in the markets, and that is higher quality stocks, right? High dividend payers and shorter duration stocks, meaning those with low price to cash flow ratios. these have been outperforming. They're also more prevalent outside the U.S., and that's one of the reasons why international stocks are neck and neck with the S&P 500 this year. If you look at the EFI index, despite this incredible rise in the dollar. So you can set the dollar issue aside for a moment and focus on the fact that we are seeing this continued outperformance, even in October and early November, in high dividend payers, short duration stocks, more prevalent in international benchmarks. And that's allowing the FTSE, the Nikkei, and even the Euro stocks to do pretty well this year, despite that rise in the dollar. So I'd focus on those international markets.
Hey, finally, Dan, crypto. Is it too small and too siloed to cause contagion, as Citi argued on Friday?
Yeah, Carl, I largely agree with that. I think on a national scale, a global scale, when you look at the financial markets, you look at our economy, it is probably too small to matter. That being said, clearly there's going to be local markets, into big individuals, big companies that get caught offside. So, we're certainly, there's plenty of room to make more headlines here. But ultimately, when you step back from the fray, it's a very, very small portion of overall people's wealth, people's portfolios, financial markets, and transactions overall. So I'm not hugely worried on a macro scale.
Hopefully we'll talk in the coming days, guys, once we get some of these retail earnings, a better read on the consumer. But thanks for helping us set the table this week, Dan and Jeff. We'll see you next time.
Thanks, guys.
Thanks. See you.